Hello and Assalamu alaikum everyone. I'm Zani Amlani and I have with me Mr. Mohammed Ali Ahmed, MD and CEO of EFU Life, and we will talk about EFU Life's performance for the year 2024. Ali, thank you for joining me for this important discussion.
Assalamu alaikum Zani, thank you for having me.
The year 2024 was the first full financial year for you as the CEO of EFU Life. At the same time, in many ways, it was also one of the most challenging years for Pakistan. Let's start this conversation with your views on 2024.
Absolutely, thank you. So no conversation is complete without discussing what happened in 2024. So yes, of course, this was my first year as a CEO, but at the same time, Pakistan and I think globally as well, there was one phenomena which I believe was a critical factor, and that impacted our business also, and it impacted I think the entire industry and the economy of the country, and that was the high inflationary environment. So inflation touching almost 40%, this is unprecedented in Pakistan. We've never had such high inflation rates, and the ripple effect that we had, especially on our existing customers and the potential customers, was simply a cash flow crunch. Now, being a life insurance company, the business that we write, it's a long-term savings business with an element of protection associated with it. But the inflation rate actually squeezed our customers in terms of their premium paying capacity. At the same time, making a new sale was becoming difficult because of high inflationary environment. A potential customer did not have disposable income. So they had income for their necessities, but not income for something like insurance, which is generally not considered a priority. So I would put 2024, the highlight of 2024 was the high inflation rate, and that impacted the entire business model effectively.
Now coming to EFU Life and the key financial metrics for the company, please share how did the company perform during the year 2024?
So now if we just connect it to what I just described, the high inflation, we did achieve almost more than 11% growth in our gross premium. We closed at 41.67 billion. So I would rate the performance as satisfactory. At least as a CEO, I would say that it could have been worse given what we were going through. But an 11.2% growth in the gross premium is a good growth to have given the circumstances. Now, if you break it down, we have the individual life business, we have our corporate business. Very recently, we acquired, in 2024, we acquired health business also, so that has contributed to our top line as well. So if we take the total individual life business, which is new business, and the renewal base, and the new business is our Salesforce, the bank assurance, all of it together, and the renewal also for Salesforce and bank assurance, the figure we closed at was around 30.8 billion. Now that's slightly less than what we did in 2023. It was 31.65 billion. And again, I would attribute a part of this to what I just described, the cash flow crunch on our customers. So our persistency did get impacted, but I think towards the end of the year, we were able to bring it back to, I would say, respectable numbers. But the cash flow crunch, we did see high surrenders happening, and it has impacted our renewal. But still, I would say 30.8 billion of total individual premium is a good number to achieve. Then within that, the new business was 5.26 billion. It was 5.56 billion in 2023. So a slight reduction, but I think again, given the circumstances, we did sustain our market share. Now the renewal out of that 30.8 is 25.54 billion. That is something that has always been a priority for the company, because given our long-term business model, we want customers to stay with us for a longer period, because that's how the financial sustainability of our business model, the profitability is generated from a good renewal base. So we will continue to focus on building this up. So whatever business we have written in 2024, we will try and achieve good persistency in 2025. Now moving on to our corporate business, that's for the last 3-4 years, we've seen the corporate business gaining more share in our total gross premium, and we closed at just short of 10 billion. I would have liked it to be 10 billion, but we ended at 9.91 billion. Now, compared to where we were in 2023, that was 5.46 billion. Now, that's a huge jump. One part of that is the new health business that we acquired. So the health business, we started that from 1st of May 2024, and the health business alone was 2.6 billion in this figure. The other contributor was our digital inclusive business, which had a manifold increase just because of the penetration that we managed to do, but also our group marketing team, our employer-employee segment also showed overall good growth. Coming to our Takaful business, the total Takaful, which is individual Takaful, renewal of Takaful, Salesforce, Banker, the corporate business, all of it together, we were at 9.53 billion. So that's, I would say, almost a 12% growth in our Takaful business. And out of this, individual family Takaful was 1.82 billion. We did around 1.87 billion in 2023, so slightly short of that, but again, I'll attribute it to the environment that we had, the high inflationary environment. Our group Takaful did really well. We, for the first time, crossed 1 billion in group Takaful. We ended at 1.24 billion, and that's an increase of around 52%. So in the private sector, this makes us the largest group Takaful provider in the country. So this, I would say, is a from a top line perspective. Now moving to the bottom line, we had a good year, I would say. Our profit before tax was 4.96 billion. So all our business segments, individual life, group, Takaful, all of them contributed. On the health side, we did have some pressure because right now we are in the first year, or I would say not even the full first year. We only had 8 months of health insurance. So the idea was to capture market. And we've gone out with the strength of the EFU Life brand. We've got very good feedback from the market. We are revisiting the product range. We are coming up with new products. But 2024, we did see stress on the bottom line of health. But I do expect that in the next couple of years to improve. So overall, profit before tax was 4.96 billion, and profit after tax was 2.99 billion. And I would say that that's a good performance given the tough economic condition, the uncertainty that we had during 2024, especially for the first 6 months of the year. But things did sort of improve towards the towards the later part of the year. Our shareholder equity is at the end of the year was 9.19 billion. And also continuously we've been giving a very good return on equity to our shareholders. So for 2024, at the end of the year, the ROE was 32.5%, which I would say is a high ROE given the environment that we were operating in. And finally, we ended up giving a cash dividend of 150%, 15 rupee per share. The 7.89 billion is our total death, disability and health claims. When we compare that to 2023, the figure was 3.85 billion. So that is a significant jump. Now let me break it down. The 7.89 has two parts to it, the individual business and the corporate business. So individual claims were 1.2 billion for the year, and the corporate, which is health and life combined together, was 6.7 billion. Within the 6.7, 3.12 billion was for the newly acquired health business. So I would attribute that increase from 3.85 billion in 2023 to 7.89 billion in 2024. A major part of that is the health business. But because our life business is also increasing, we've had growth, especially on the corporate side. So our number of lives are increasing, our base is increasing, our sum at risk is increasing. So we would expect more claims to come in any case on larger portfolio. But predominantly it's the health business where 3.12 billion is contributing to the increase in claims.
Right. I want to now shift the focus on the investment portfolio of the company. With an impressive balance sheet size of 259 billion, out of which 231 billion are the unit-linked funds under management. How would you rate the performance of these funds during 2024?
So our investment-linked business is the predominant business that we do on the individual life side. And I would say that being an insurance company, we are also one of the largest asset managers in the country. Our assets under management were 231 billion at the end of December 2024. This figure was 187 billion in December 2023. So that's a significant increase of 23.5%. Now, this is attributable to the high interest rate environment. The investments that we were making were predominantly in government bonds, T-bills, a small portion in PIBs, fixed PIBs, a small portion in floater PIBs. And over this period, the average return on a 3-month T-bill was in excess of 20%. And so that has impacted, that has benefited and helped the growth of our funds. But also the renewal base, the 20.8 billion that we discussed earlier, that is adding, feeding into our funds. And also the new business that we did, all of that is feeding into the funds. So our net investment income over this period was 62.6 billion. And the major reason was for the high growth in investment income was the high interest rate environment. Now, the result of all of this was that the fund performance was phenomenal. I mean, this year, the 1-year fund performance for all our funds, whether it is our conventional funds, whether it is our takaful funds, it has been the highest in the last few decades. And of course, if we had only invested our funds in government securities, we would have earned a 1-year return of like 20-21%. But the fact that our managed growth fund, which is our flagship fund, ended up at 31.2% return means that the 10-15% that we invested in the stock market, that was done prudently. We picked up stocks which either were high dividend yielding stocks or we had capital appreciation, capital gains on that, unrealized capital gains. So all of that combined together helped us beat the fixed income market, the government bond return, and we ended at 31.2% for the managed growth fund. In takaful, we have limited options. So the entire universe of the stock exchange is not available to us in terms of Sharia compliance. So we have to be very selective. We have to follow the Sharia approval processes to invest in the stock market. At the same time, unlike the conventional side where we have T-bills, we have fixed PIBs, we have floater PIBs, in takaful we have ijara sukuk. That's one of the investments we have. We have Islamic term deposits. So the universe is limited compared to the conventional side. But despite of that, we ended up giving a 29.5% return on a 1-year period of our flagship takaful fund, the takaful growth fund. If you look at a 3-year period, we gave 18.4% return, which again is a very good return, keeping in view Islamic investment avenues which are available. So in 2024, there were, I would say, 2 major aspects which happened in EFU Life with regard to wellness and overall the focus on health and health insurance. The first one was the acquisition of EFU Health Insurance and the subsequent merger into EFU Life, and this happened effective from 1st of May 2024. The other bit which I briefly touched upon was our wellness initiatives. So we decided to set up an entire new business segment with the focus on wellness and well-being. That was the whole idea. And the idea was that the products that we offer, how can we reward our customers for a good lifestyle, a healthy lifestyle. And the second part of our health-related journey in 2024, as I mentioned earlier, was the launch of our wellness platform. So the idea was wellness and well-being. How can we integrate that into our product proposition? How can we integrate that into the communication that we're having with our customers? How can we also tap into untapped segments? For example, the youth segment that we just spoke about. So that's when we launched a new brand within EFU Life called WIN. That brand was launched, I think, in the 3rd quarter of last year, 2024. And the idea was to offer rewards in our products for those customers who lead a healthy lifestyle. And then coming to the overall concept of wellness and well-being and the acquisition of the health company, we thought it was needed that we should have a digital health platform. And that's where our mHealth platform comes into play. So this is again an integrated app which offers connectivity to doctors. It offers a platform for pharmacies. There's a lot of content that's there. And the idea again is to create that engagement with customers. What we've also done is that the concept of well-being and wellness, apart from physical well-being, mental well-being, we are now expanding that into financial well-being. because we feel that wellness and well-being holistically needs to cover this aspect also. And this also connects with our earlier discussion that we were having on the financial literacy bit of it. And eventually all of this connects to that insurance penetration rate that we were discussing about. Now, how have we communicated? Digital platforms, we believe, is the way to go. The digital marketing campaigns that we have done around the concept of WIN over the last third quarter and the fourth quarter of the year, the reception has been very good in the market, because the messaging of that campaign, the look and feel, the content of those campaigns, it's talking to the relevant audience. It's connecting to the relevant audience. It's trying to create that understanding of why one needs to take good care of their health. And I think that's something that we are going to build upon further. So overall, I feel that these various components of health, wellness, well-being are going to converge together, and 2025 and going forward, they're going to be a significant pillar of how EFU Life moves forward.
Right. With 2024 behind us now, how do you build on the experience and learnings moving into 2025 and beyond?
So the learnings of 2024 are carrying us forward into 2025, where we have a plan in place. We have a plan in place for all aspects of the organization. I don't think we've missed out anything. We've covered everything that's needed for EFU Life to enhance its market share. That's the first thing we want to do. To be the insurer provider of choice. And we want to have that top of mind recall. Whatever we do, we want our brand, EFU Life, to be that brand that a potential customer thinks about first whenever they are thinking about their financial planning and insurance solutions. So right from products, segmentation, distribution channel, technology, and the overall brand enhancement, these are areas that we're working on. Takaful, also I mentioned, I feel that as the wave of Islamic banking gains strength, and we'll have to see where it finally lands by 2028, but we are on track as per what SCCP wants us to do. So Takaful also is going to be a focal point for 2025 and beyond. Our brand image, our brand value would be higher as we go forward, and our association with our customers, our partners, would be even further deepened in terms of whatever we want to do. I'm optimistic. When you have such a low penetration rate, whatever little that you do as a company, that contributes to that overall bigger picture. So I'm very confident, not only in Pakistan, because we now see signs of revival, we see signs of optimism, but also as a company, I think in terms of our management team, we have one of the best teams in the insurance sector, a team that is aligned in terms of what needs to be done, and I'm very optimistic about 2025, and when we end the year, I'm sure we'll end it at a good and positive note.
Thank you, Ali, for sharing great insights into the company's performance for 2024 and the strategy going forward. And on this optimistic note, we conclude this interesting and insightful chat with our MD and CEO, Mr. Mohammed Ali Ahmed. Thank you, Ali, for taking out time to share your views with our audience.
Thank you, Zani. I thoroughly enjoyed our conversation.
Allah Hafiz. See you next time.